Sorry. Welcome back. Famous legs 11. Have we got 11? 1, 2, 3, 4, 5, 6, 7.
There's some over here. Yes.
Yeah. I've just got a message, which I didn't pick up obviously because I was chairing, that Councillor Sayers wants to log in by electronic attendance, so I'd like to move that. Do I have a seconder? Thank you, Councillor Mulholland. Can you send? Yes. Councillor? Thank you. Right, ladies and gentlemen, we now come to our Treasury Management Policy Review. And we have John Bishop with us. John, just before you start, I'd like to cover two aspects around this. In light of some recent media attention, I want to cover the policy itself, why we have it, what it says, and the outcomes, etc. And then I want to look at the outcomes that the policy delivers, especially around the recent, as I mentioned, recent media coverage. So let's deal with the policy first, and I'll hand over to John Bishop. Thank you.
Thank you, Madam Chair. So look, the policy itself, there's very few changes from the current version which are being proposed. The two changes are simply reflecting the new title for Standard & Poor's, and also under the credit exposure policy, making it clear that when we're looking at our counterparty risk, so the banks and other institutions that we deal with, we first look at the S&P rating and only look at other ratings if they don't have an S&P rating. So that's just a point of clarification. Everything else remains as it was. I do make the point in the paper that we may review it again as we go through the LTP process, depending on where we end up on things like debt parameters, etc. Just touching on the sort of media articles which you've seen to do with our interest rate hedging. I've just got a short sort of presentation here which I'll run through. And at the first slide here, just remind you of the Treasury governance that we have in place. So at the top there we have the governing body in this committee, and they're responsible for approving the Treasury Management Policy, which we're going through today, or the TMP for short. We also have further down there the Treasury Management Steering Group. Now that's a group made up of two independent people and senior financial executives from council parent, and also Watercare and Transport being the larger CCOs. Now that gets its authority from the Chief Executive, and it's managed through a Treasury Management Group Steering Group Charter, which the Chief Executive approves and is reviewed every 3 years, or as required. Now the TMSG, or Treasury Management Steering Group, they also have what's known as the TOM, or Treasury Operating Manual. Now that is a more detailed Treasury policy, but it must be entirely consistent with the Treasury Management Policy which you approve. Now the Treasury Management Steering Group meets throughout the year. It receives monthly reporting from Treasury on aspects of compliance with policy and also performance. This committee here also gets reporting. So in the quarterly reporting pack that you get, you'll get a one-page summary of some of the key Treasury performance areas and compliance with policy. As you'd expect, Treasury is also subject to internal audits. They're generally annually, and those findings go through the Audit and Risk Committee. So it's just a brief overview of sort of the governance framework and the documents which govern our Treasury operation. Now, interest rate hedging. Let's start with the basics. What is interest rate hedging? Now, hedging fixes an interest rate, so we know how much interest, or simply put, cash interest, we have to pay in the future. Now, it can be achieved in two ways, which are economically equivalent. The first is by simply going out there and the council issuing fixed rate debt. So an example of that is our recent 30-year green bond issue, which was fixed at a rate of 2.95%. The second way of doing it is issuing floating rate debt and fixing it with an interest rate hedging contract, or what's commonly referred to as a swap. Now, typically, we use that second method. The reason for that, it's generally considered best practice, and it's also advantageous given our long-term planning horizon. Essentially, what we want with the interest costs is certainty, so we can deliver our services and capital program as planned. Now, while I said that those two approaches are economically equivalent, each has a different accounting rule. So what do these accounting rules mean when it comes to interest rate hedging or swaps? In simple terms, what it means, if interest rates have gone up since the swap was entered into, we will report an accounting gain in our accounts. Conversely, if interest rates have gone down since swaps were entered into, we will report an accounting loss in our accounts. So for the financial year just ended, Auckland Council Group recorded an accounting loss of $756 million on interest rate swaps. Why do we record that? It's because interest rates went down. In 2017-18, I think we reported gains. Why do we report gains? It's because interest rates went up. Now, the accounting gain or loss is only realised if we were to terminate that swap and revert back to a floating rate exposure. But it's our standard practice to get those swaps in place until maturity. Now, these accounting entries, so these accounting gains and losses, do not change how much interest we pay. So the cash interest that we pay out each year is not impacted by these accounting gains or those losses. That dollar amount doesn't change. So let's look at our interest rate policy. So our interest rate policy is contained in our Treasury Management Policy, which you're looking at today, with more detail in our Treasury Operating Manual, or TOM. Now, this TMP is a requirement of the Local Government Act 2002. So let's look at some of these quotes in the TMP when it refers to interest rate management. Just look at the second one there. We look to prudently manage the Council's borrowings to ensure the avoidance of maturity and interest rate repricing concentrations. Now, why do we do that? I'll give you the example I've given before. If we didn't have any fixed rate cover and we had all our interest rates at floating rates, we've got $10 billion worth of debt and it's growing. If interest rates went up by 1%, our interest costs and our cash interest costs would go up by $100 million per annum. Now, what would that mean? To cover that cost, you would have to increase rates by 6%, or you'd have to cut back on services or some of our capital expenditure program. The next quote there, the Council prefers predictable interest, income and expense to minimise the risk of adverse movements impacting the operating surplus. So again, we have a bias to protecting the upside. While we'd all like to participate in lower rates, our real concern is that interest rate rise, our cash interest costs go up, and we can't afford to do some of the stuff that we've planned. The next one there, the primary objective of interest rate risk management is to reduce uncertainty about net interest income or expense as interest rates change. Again, very much along the lines of what I said before. The last one there, mechanism used include, within risk limits, fixing rates through fixed rate borrowings, as we talked about, and by using interest rate hedging instruments. So these are the swaps that we're going through today. Now, our approach to interest rate risk management, which of course has made the headlines this week. Now, to be clear, they are the way we operate. It's within our approved policies, so our TMP and our TOM, and always have been. Now, when you get this quarterly report on Treasury, on landscape version there on the bottom left-hand side, that shows you our hedging policy, and it shows you our parameters, the minimum amount we must have fixed, and the maximum amount, and then the amount of hedging we have in place. So you see that every quarter. Our Treasury Management Steering Group sees that every month. Our approach is consistent with best practice of other large councils and organisations. The policy we put in place too must be applicable across all interest rate cycles. We shouldn't be just adjusting our policy just because interest rates are low. We'd be having a very different conversation if interest rates were at historic highs. Our accounting losses, and they're just accounting losses, are similar to those of other organisations which have large debt portfolios. So relative to the size of their debt book, the mark-to-market on their interest rate derivative position or interest rate swap position will be very similar to ours. Let's be clear, these aren't cash gains or losses. They're simply accounting rules. Like we don't celebrate our gains, we don't celebrate our losses. They're just accounting entries. Also, to be clear, we're not speculating on interest rate movements. Our approach is very similar to what you do is when you go out and take out a mortgage. You go and buy a house, you take out a mortgage at 4%. Interest rates move, they might go up to 5%. They might go down to 3%. We're locked in at rates just like the homeowner is. We're simply not speculating on whether interest rates go down or up. What we're trying to do is protect our interest costs so we have enough certainty to deliver on those services which council needs to provide on a capital expenditure program. We can't change the fact that interest rates move. They have done and will continue to do. And our approach is conservative. It errs on the side of caution, but we want to protect our ratepayer money. The other thing about these interest rate accounting movements, these gains and losses, they must reverse. The reason for that is that on day one, the market value of a swap we enter into is zero, and on the last day, it is also zero. In between times, as interest rates move, we'll get gains or losses. Now, this is not a John Bishop opinion, it's a fact that, from economic, mathematical and accounting views, any gains or any losses that we see must reverse over the time of those swaps until you hold them to, as long as you hold those to maturity, which is our practice. Look, our approach is also supported by our credit rating agencies. And this is a quote which I'll read out from Standard & Poor's when they reaffirmed our rating less than 2 months ago. And one of the factors the rating agencies look at is our financial management. We get a 1 for that. That's the top rating we can get. And this is what they say here. Auckland's experienced financial management team is successfully managing its financial risks, including debt, so it should be elevated debt levels, despite substantial growth and demand for infrastructure in the large city. Its prudent fiscal strategy outlines key policies and financial targets around borrowing limits and liquidity coverage. Reflecting both its size and management capability, Auckland is permitted to borrow offshore. While there are some risks associated with that, we believe they are well managed by the team, and the council hedges all of its foreign exchange and most of its interest rate exposure.
We gave that quote to Matt Nippert, but he didn't think it fitted his scenario, so it was never used.
Look, yeah, I mean, he didn't want to report the facts in a constructive way. It wouldn't have made for a very interesting story. So on that, Madam Chair, I'll hand back to you.
Right, thank you, John. Look, I've got a couple of questions for you. Why are you suggesting we sign off this policy which locks us into a credit rating of AA and delivers on approved financial projections from our LTP and annual plans now, when we haven't agreed the LTP and when COVID-19 is delivering so much uncertainty?
Yeah, through you, Chair. So I believe at the moment the policy remains fit for purpose, but I think I mentioned in the paper, as we do go through this exercise with the LTP and we do look at the levers we can pull, we look at borrowing levels, it may well be appropriate to come back and look at this policy again. Now, as it happens, we tend to review this policy every 3 years. There's nothing stopping us reviewing this policy at more frequent intervals or as required. So if we do make substantial changes in the next LTP as a result of COVID or other factors, it may well be appropriate to again review this Treasury management policy.
Okay, I think that's a very good point, thank you. My second question is, you've said that you're confident that the policy is still fit for purpose in its current form. What independent advice have you had on the policy and on the Treasury Management Steering Group?
Yes, so on our independent steering group, we have 2 independents, and up until recently we had 3. So again, the Treasury Management Steering Group, they review the Treasury Management policy, and then they essentially endorse it and recommend it to the Finance and Performance Committee. So it has been reviewed by experienced independent members as well as by senior council staff.
Thank you. And on that note, I'd like to bring to the table Alex Wandergem, who's a partner at PricewaterhouseCoopers, to provide us with some independent advice as to this policy. So welcome, Alex. I haven't met you before, so please tell us about your background and credentials to assist me give Auckland ratepayers the confidence that we are receiving good, independent, experienced advice on this issue. Thank you.
Sure. Good afternoon, everyone. As the chair has mentioned, my name is Alex Wandergem, and I am a partner at PwC. I have been advising a large number of corporate and local government authorities and borrowers for over a decade now, advising on over sort of 20 billion of debt. That's a range of borrowers from NZX 50 listed all the way through local government, advising around 70 to 80% of all local government debt currently on issue in the country. So I have a reasonable background and experience in treasury management and treasury management best practice.
You've answered my next question. Is this policy commensurate with other large organisations? So you've answered that, so that's great. So in your professional opinion, should we sign this policy off today, and if so, why?
The policy framework that you've operating to and the changes that are being proposed, in particular the changes are relatively minor in nature and more sort of wording tweaks. The current framework is prudent in terms of your approach to interest rate risk management particularly, and the management of your borrowing costs to deliver to your plans and budgets. John Bishop has obviously articulated a number of those reasons, I believe, very clearly in terms of the certainty that's required for an organisation of your nature. You are a risk-averse borrower, you are a prudent borrower. The Local Government Act does require that of you. Your approach is entirely consistent with other large corporates, other council borrowers, both large and small, in terms of the efficient management of your borrowing costs. And the approach is really there to manage the upside and manage adverse risk. Obviously, participation is nice, but the preference is to manage away risks of upside adverse interest cost outcomes.
Thank you. In your professional opinion, does this policy give us enough flexibility within the financial constraints that we have around the COVID-19 situation?
I believe it does, in terms of the policy being the framework that you set to manage your risk, and then within the policy framework there are strategy decisions to be made. As John has mentioned, there is an ability to amend that policy as needed, as and when changes to your plans require the policy to be reviewed once more. But as it currently stands, the policy is fit for purpose and agile enough to provide the flexibility that's needed.
It's good, thank you. And my final question, before I open to everybody else, is there has been some media attention around the so-called $1.4 billion loss. Is the work the steering group is doing with regards to such things as long-term green bonds and fixing interest rates through swaps and therefore locking in a proportion of our interest costs for a period exceeding 10 years the right thing to do or not?
Council is a long-term intergenerational borrower. You're funding and financing assets which have an average life of 50, 60, 70, 80 years. To be managing interest cost and interest expense over that period is entirely prudent to deliver to your plans and your budgets, and to undertake a no surprises approach to your ratepayers, so consistency in terms of those outcomes. The use of interest rate swaps is an extremely common product. It is the most vanilla interest rate product that can be used in terms of a sort of global application, domestic application. It is a very standard product, and the way that those are applied as opposed to the use of fixed rate loans and fixed rate debt, as John has mentioned, provide the same economic outcomes. Rates rise again. So the approach again is entirely consistent with best practice of an organisation of the nature, size and type as your own.
Thank you, Alex. Look, I really appreciate that. And as you've given such detailed answers, I wondered if you would be willing to speak to media, noting your professional opinion on our behalf.
I'll have to refer that to our media liaison.
Okay. But you don't see a problem with backing up what you're saying in this meeting?
These approaches that have been taken are consistent with best practice.
Thank you. Right, we've got other questions. I have Councillor Fletcher, Councillor Coombe, Councillor Casey and the Mayor.
Thank you, Madam Chair. My question is to all of us, but I do have a specific question for Alex. And the question is, this comes to the heart of our responsibilities in terms of governance. And I've taken an interest in these issues for quite some time. I had the privilege of serving for a number of years on the board of Auckland Transport. And I spent hours of time along with the board giving consideration to hedging. And we were the beneficiary, if you like, of the original EMUs because of hedging. You know, it would have turned disastrously wrong for us. So my difficulty is that I want to know, you know, and we all have to own our policy on these things in order for us to have the backs of our officers, and I want to back our officers in this situation. But the questions that I asked, going back to the years on the board of Auckland Transport, is why are they so controversial? We all know that Warren Buffett thinks they're time bombs. You know, he's been saying stuff like that right the way through the last 10 years. Perhaps from your perspective, Alex, can you help for those of us who have not spent a lot of time looking at the issue of hedging? Why are they so controversial?
Happy to speak to that, and I think part of the reason is perhaps, as you mentioned, a sort of lack of understanding of the product and its use. To Warren Buffett's comments that he's made, derivatives, which can be sort of labelled a slightly dirty word, is where they're used in a context of financial engineering or for speculative activity. What council employs derivatives and particularly interest rate swaps is the opposite, is to provide certainty and security over outcomes. An interest rate swap essentially provides a fixed rate contract. It is exactly akin to a fixed rate loan, albeit it comes with additional flexibility, which provides a sort of preference as opposed to fixed rate debt. The controversy, I believe, comes through these accounting standards which require a revaluation of an interest rate product, whereas a fixed rate loan does not require a revaluation. And I believe that's where the controversy stems from, is a misunderstanding about a realised versus unrealised gain or loss reported, albeit the economic outcomes are exactly identical.
So, Madam Chair, I think, as I said at the beginning, this comes to the heart of our responsibilities of governance. We need to go into these things with our eyes wide open, caveat emptor, you know, let the purchaser in this case be aware, and then be willing to back our officers if this is our policy that we have adopted. So it's not just one that we can fob off and somebody else's problem. This was an actual policy that we endorsed, and I think we have to live with the consequences, because there will be negatives and there will be positives, as if you take I think you used the term intergenerational or longer term perspective on it. So I thank Alex for the interpretation that he has given, and I would really encourage other councillors and members to really do a bit more of a deep dive into this issue, because it's really complex.
It is, and that's why I invited him, because he's very clear.
And I think it would be very helpful for there to be some documentation on those occasions when council was, and the council whānau, you know, the CCOs and so forth, where it can be demonstrated the advantage of this policy. And I mean, I've got first-hand experience with some, but I think perhaps this committee could have a little bit more of a breakdown. Maybe, John, you could provide some other examples that would be helpful and inform, so that when we adopt the policy, we own the policy.
Thank you, Councillor. Councillor Coombe.
Thank you, Madam Chair. Tēnā kouroua. That was a really useful overview and very clearly presented, thank you. And I just wondered, is it going to be packaged in a way that we can share that? Because obviously I've been receiving emails from grumpy constituents, and to be honest, I was grilled in a very aggressive way by a board member at the Waitemata local board meeting the other day about this issue. So I'm just very keen to have, you know, a clear statement that I can share, which I'm hearing from the chair that's where we're heading to, but I just wanted to confirm that.
Yeah, through you, Chair, there's a sort of a Q&A on, I think it's on Our Auckland, which has been published, which
okay.
gives the basic sort of facts of what we do and why.
Yeah, just to add to that, Councillor, I've asked Tam to transcribe the answers to the questions I put forward, and I'm happy to circulate those.
Oh, great. And presumably this presentation is going to be
It's
on
public,
the minutes.
yeah.
Yeah. And sorry, just a second question. Is this the opportunity to ask about the actual policy?
Absolutely,
John?
yes.
Yeah. Just in terms of, and I guess I just need some direction though, Chair, around, because I sort of want to draw it on what we were given an update yesterday in the workshop, but that was confidential workshop about the debt to revenue. So I just want to know how that then interfaces with this in terms of our prudential limits.
I know what you're saying. We've got to just be very careful.
Yes.
Can I just hold that question till this afternoon? I'll ask if that's this afternoon when we have our workshop. Right?
Okay, so it's a query around the wording. Thanks.
Councillor Casey.
Mine is actually a question for the Mayor, and it's to do with the Herald's 3 articles, Matt Nipper and Brent Melville, and reporting of David Cunliffe. Some of the language used in those articles undermines the policy of this council. So I want to know that we've had a look at it, and if there is any possibility of making a complaint to the Press Council with regard to the undermining.
Yeah, I'm a great admirer of investigative journalism, but too often those posing as investigative journalists are simply after a sensational headline. And that's what we got. I've got it here. It was exactly what I predicted to Kevin Ramsey we'd get, even though a full explanation had been given. It was going to be a front page story, but something like COVID-19 came along. I didn't arrange that for the event, but Council's rate hedge bet a disaster. 1.4 billion Auckland's council's bad bet, and then Cunliffe slams loss, describing it as incompetent. I have vague memories of the gentleman. I won't go there because that's exactly what the media would want me to do. But it is really unfortunate. You know why. It's really unfortunate, and I think that it is potentially damaging to people that don't understand these things, which is why, Alex, I think it's important that somebody who is a partner in one of the biggest consultancies for accountancy and financial management in the world actually puts something out there to say, I'm sorry, this is the perspective of 3 individuals that he's handpicked and chosen, and not the perspective, Kathy, of what the mainstream of the accountancy and financial management world might be. And I think it is potentially damaging. When we gave that quote from Standard & Poor's, I gave that to the Herald. They declined to run it. I was asked last night whether I would take up Mr Cunliffe's advice of inviting the Officer of Auditor General, and I pointed out that the Officer of Auditor General audits our books on a regular basis. He does it annually, and he attends and meets with the committee members of Audit and Risk quarterly. and there has never been an occasion where the Auditor-General has raised this issue with us. And if there was a material risk because we were incompetent and following a disastrous policy, I would have imagined that the organisation responsible for auditing us would have drawn our attention to it. That has never been used as an issue, raised as an issue with Council. So the short answer is you probably won't get very far with the media or the Press Council. I understand that officers may be raising some questions about the presentation. But I just want to finish on this note. I don't always agree with letters to the editor, but there's a really good one that I'd invite people to read in today's paper. And the individual talks about what hedging is for and why you have it. And he makes this comment at the end. If I'd known when I bought my house 25 years ago that it would still be intact and standing today, I wouldn't have wasted all that money of insurance premiums. Yeah, look, it may be that we waste our money on insurance, but if the house burns down, that's why we have it. Why do we hedge? We hedge because the interest rates can go either way, and if it goes the other way, the losses aren't paper losses, they're real losses. And it really is a shame that we didn't get a more balanced account. It was clear to me from the article yesterday, keep asking me for comment because he wants to beat up the story even further. You know, Cunliffe versus Gough. Well, I'm not interested in that sort of bullshit. I want to get clear, clean reporting, and it's the obligation of any reporter, in my view, to provide a balanced account of what he or she is writing about, and we certainly didn't get that.
Honest account.
Sorry, that was a long answer.
It was a long answer, and if you'd like to give me Mr Cunliffe's contact details, I'm more than happy to write him a letter. Councillor Watson.
I think a few of us might. Sorry, I did have a question. Yeah.
Oh, did you? Sorry.
Yeah, and it is to Alex. How does our policy, in terms of the way we hedge our debt, because it is a large debt, how does that compare to comparable borrowers, either other large councils, which won't be comparable in New Zealand, they'll be much smaller, but with corporates? Do they pursue the same sort of hedging to protect their position?
Absolutely they do. Your policy is very consistent with best practice management for other local authorities and large corporate borrowers, and indeed what the central government borrows entirely on a fixed rate basis.
Thank you for that. So when somebody from an organisation called Wigram Capital, I presume that's on the same scale as PwC, is it?
No.
Thank you, Worship. I don't think Alec can answer that question, but I think it's rhetorical.
PwC employs more than 250,000 people around the world. I'm not quite sure how many people Rodney Jones employs. But when you get that, and then you get comments from a retired politician, such as we get, we do really need to have... I mean, I can go out and say, I've got great confidence in John Bishop and our Treasury team, which I do have, but then they will say, I would say that, wouldn't I? I would really ask you to talk with whoever you need to in your organisation. You're a partner of that organisation, to have the opportunity to put an op-ed in to explain from an outside perspective with considerable expertise and the backing of your very large organisation that this is not a disaster, this is not incompetent, this is an orthodox, maybe a little conservative way of managing your risks and protecting the ratepayer against real losses. So if you could do that for us, that would be really appreciated. It is a third-party, independent, expert view, and I'm sorry that you weren't contacted by Mr Nippert when he wrote the articles.
Thank you, Your Worship. Councillor Watson.
I mean, just to that last point, Alex, your firm is one of those that is retained by council, is it? You're one of the private sector experts. Okay, so you know, if all I would say in respect of that if you feel moved to do that, then that should be of your own volition. I don't think it should be at our prompting, because there is a perception issue there in terms of the relationship between us and council. Just going to you, John, and you mentioned about the the accounting entries and how 2017-18 were one of gains, and then the last 2 years have been ones of losses. I would have thought, and this might be overly simplistic, but I would have thought one of the best measures to rebut the general tenure of the article would have been some analysis of how it's worked out over the last 10 years. Why didn't that occur?
Look, through you, Chair, look, I've spoken to this particular reporter 3 times and gone through the same information 3 times, given him the same facts and figures, but he will choose to report what he wants. He's got the pen, unfortunately.
So what does it work out as, John? If we're going to balance it up, what does it work out of?
The gains and losses overall?
Yeah.
The net position now, given where interest rates are, and so this is a look-forward approach. So technically speaking, we're looking at all our cash flows out in the future at fixed rates and discounting them back at today's low rates. The figure at the moment, or at the end of September, is about 2.7 billion. But as I said before, we held those contracts to maturity, which we will. We're going to see a net $2.7 million gain come through over the next 10 to 14 years. And that's the way it has to work. That's a economic and accounting and mathematical fact.
So we can't do it on the years that have already gone by and deal with the decade. They refer to, it's this being in operation since the inception of the Super City.
Yeah, it gets a little bit tricky because obviously some interest rate hedging contracts which we had in place then have matured, etc., etc. So it's hard to do an exact comparison like that. But again, the information has been shared with Mr. Nippert. I mean, he asked about the highest individual swap that we had, which we gave him. We also pointed out that some of our swaps that we have are less than 1.3%, but he didn't choose to report that.
And this item today has been billed as something of an examination of the articles as much as the actual policy. I've got a kind of question that goes to both, and it goes to some of the comments that were made by the people in the articles, which do have policy implications in some respects. The first gentleman criticism really referred to the notion of all the long-term debt with a large chunk being tied up for a decade, and he referred to that as being extremely aggressive. So I guess what I would appreciate clarification on is the length of these arrangements, and whether that decade outlook is wise, notwithstanding what you've said about Council's precautionary approach.
Through you, Chair. So if you look at the extent of our interest rate hedging, so the fixed rates which extend beyond 10 years, it's 2.9 billion. Now in 10 years' time, our debt's forecast to be around 15 billion, because it extends beyond our current long-term plan. So that is, only about 20%. When you go out past 14 years, we've got interest rate hedging contracts for only about 290 million. So again, it's a very, very low percentage of our forecast debt at that time. So again, the prudent thing to do with low interest rates at the moment, and likely over the next few years, would be to add to that hedging out in that time period, so it does give us some certainty when we get out 8 or 10 years. And if you go forward 10 years' time and we only had $2.9 billion worth of cover, and interest rates were back up where they were, say, 10, 15 years ago, the question will be asked, well, why didn't you put more fixed rate hedging in place when rates were so low?
Final question I've got, changes tact a little bit, goes to the actual policy, and I think someone yesterday, and it goes to liquidity in our policy. And someone referred yesterday to, we don't have a rainy day fund. Well, we did have a rainy day fund a couple of years ago, so it amounted to $335 million. And at that time, the comment was made in our agenda item about the possibility of having to replace that liquidity, that fund provided. So I guess two questions. One, was or has that diversified assets portfolio fund, has that been replaced in any way in terms of liquidity? And secondly, in terms of the clauses going to liquidity, are we meeting the requirements of that section of the policy?
Yeah, through you, Chair. So there's two ways which you have liquidity. One is, as you correctly point out, is you have a pool of cash or assets which you can call upon. The other way is you have what's known as standby facilities. So they are facilities with banks, which means that for a payment of an upfront fee, like an insurance premium, we have access to draw down funds as required. Now we have about $1.3 billion of those facilities with a range of 10 banks. And if we needed to, so if we couldn't access money through the normal debt capital markets, such as was the case sort of during the GFC, then we could access those bank standby facilities. So when we look at our liquidity policy, we have to have either cash or standbys up to a certain level, and it's typically a 6-month time frame, so we have to have enough cash or standby facilities to meet our forecast requirements, including maturing debt in the 6-month time horizon. That policy itself is also in our Treasury Operating Manual and is monitored on a regular monthly basis, and we've always been compliant with that.
Thank you, Councillor. Councillor Darby.
Oh, thanks, Chair. Look, it's a pretty big issue. Credit to Mr Nippert, because he's got me a lot more engaged, as I should be. We are on our borrowings and rates, hedging, swaps and derivatives, and it goes on. And look, the journalist has gone to a number of sources, and while I do wonder about some of the sources and their intent, and by the way, thank you to Treasury and PwC for your account today. People are always wanting a few column centimetres as well, and I know that one of the commentators is quite a small provincial company of just 4 people, that it appears. That aside, that person might be extremely well qualified to comment. The fact that it's just a 4-person company doesn't say that that person doesn't have the skills. And then he's contacted a former Minister of the Crown, finance spokesperson at one stage, but I'm also aware that Mr Cunliffe's a Harvard graduate, he's a Fulbright scholar, and he did work at Boston Consulting, and from everything I've read, he is qualified to comment as well. So Mr Cunliffe's made some statements, some pretty strong statements, mentioning, incompetency, etc. He's put himself out there as the fountain of truth, as have other commentators, and we've got to some of the truth here today, and I have absolute confidence in what I'm hearing. But I'm just wondering where Aucklanders might be right now and how we close this off. And while the Office of the Auditor General does come in and audit, they haven't been asked specifically to take a look at this issue. And I'm just wondering on this issue and the questions raised through media and commentators in the last week, that they actually specifically look at this. Now, I've talked to our Director of Finance about this. I mean, I did think, you could go to one of the other 4, obviously not PwC, big 4 accounting firms, either Deloitte or EY or, I forget the other name, KPMG. Or you could go to the OAG and just look at a way of closing this off. Because I think we can defend this, and we've got good feedback here today, but how do we give Aucklanders the confidence that there's another final check to this? So my question is, do we deliberately refer this to the OAG?
Sorry, we're just talking while you ask your question. I know where you're going. You're taking a long time to say it, and I know where you're going. So apologies. But first of all, I want to go to Councillor Cashmore from Audit and Risks perspective, and then I'll come to Kevin from Finance perspective.
Thanks, Madam Chair. I've been on Audit and Risk Committee since 2013, and I can confirm that this question around these swaps of derivatives have been asked of the Auditor General every time. Every year, basically to comment on it, and there's sometimes a 1 or 2 line commentary in the auditor's report. And there's been nothing to show that any of the work that we're doing has been done towards the questions have been asked and has been commented on by the auditor, both the current one and the one who's recently retired.
Thank you. Kevin, do you want to add to that? Do you want to ask him specifically?
Oh, look, we have external expertise in Treasury, obviously by appointing a treasurer, and we actually have independence, and you can see the calibre of the people we do have there. We have an independent audit and risk committee chair and members, and including, interestingly, one of those independents is actually ex-OAG themselves. So we do have a lot of access to information ourselves. One of the concerns I'd have with going out suggests you think there may be a concern. So no matter how you actually word it, there will be a perception that it's being raised for a reason. We do have that audit and risk committee for this very purpose. If we wanted to go back there and have another conversation there, we could do so. There is independence appointed to both a Treasury Management Steering Group and an audit and risk committee for this very reason.
So my concern is, look, there's been quite a few column centimetres on this. There's been a lot of radio time on this. It's been on, Checkpoint, Morning Report, and print media, and there might be more. And I'm looking at how we resolve it. So what is our strategy to resolve it and give confidence to Aucklanders that we have undertaken the right processes? Rather than just telling them it's all hunky-dory.
Well, Madam Chair, I've suggested a couple of courses. One, we engage the services of PwC because of their status as a company and their competence, and therefore I think a comment coming from them, because they have the responsibility for looking at and advising us on these issues. We need to know the sort of thing that's never appeared in those newspaper columns. For example, if I'm quoting you correctly, Alex, that this is standard practice for large corporations. This is not unusual. I never read that in any of the articles. Sue Sheldon is deliberately appointed as an independent chair of audit and risk. She is exceptionally well qualified and experienced in this area, and her responsibility as the chair of that committee is to ensure that we are doing these things in a competent and professional way. One, I'm sure she would have spoken out if she did not believe that. But secondly, Madam Chair, she may be another person who could be asked upon to give comment. Why I'm worried about this is because it seems that the people who are quoted have been selected specifically to build up the story, and that other people that have been referred to and other quotes, such as the one on the screen in front of us, have been deliberately omitted. I don't mind any person looking to see whether we're doing our job competently, but I do expect them, when they do that, to do it in a balanced and a professional way. That's all I'm asking.
Thank you, Your Worship. I'm going to hand now to as you've quite rightly said, the Chair of Audit and Risk is independent for the very reason that we need them to be. But the Deputy Chair is Councillor Newman. So Councillor Newman, would you like to comment, please?
Look, thank you, Chair. I think the discussion is interesting, but I'm not quite sure what we hope to achieve out of, an approach to the Office of the Auditor General. I wouldn't support that, but the reality is I don't believe that we can necessarily guarantee the right narrative within the media. What we can guarantee is that our approach to Treasury management is prudent, It is demonstrably prudent. It is designed to give the best resilience to the council's financial position now and in the future. And we enjoy the confidence of professional organisations who advise us. That's what we can say. We can't guarantee that that's going to be reported. We can't guarantee that we can shape public opinion based on what's published in the media. And frankly, I'm not sure that I want to. Because if we can't guarantee the narrative, then the best we can do is to continue to apply a Treasury policy which is appropriate for Auckland Council and which reflects best practice, which gets us a clean audit, which it does. And that, Madam Chair, I think is the beginning, the middle and the end of the matter. We can issue a press statement on this. Rating agencies will have their view. We ought to be fairly conservative, and we are, but I'm not quite sure what we are hoping to achieve, which is realistic. There is a limit to what the media will publish. I accept that the media will often be motivated by a narrative which is not necessarily one we would like. But you know, if we were going to live based on the favourable versus unfavourable headlines, I would suggest that the council's going to be in a permanently defensive position. So I think that the discussion is interesting, Chair, but I want to commend the officers on this occasion for the approach that we have taken. I'm sorry that we have hit the headlines unfairly, in my view, on this occasion, but I think that we ought to consider the feedback we've received. We've got a paper, we've passed the paper, and we continue to endorse the strategy that has been undertaken and have confidence in people like Sue Sheldon to do the work that she does as a chair of the Audit and Risk Committee, and we will receive her recommendations in due course.
Thank you, Councillor. And I think the purpose of today, just reminding everyone what the purpose of today is to give you confidence because you're making a decision. You have to have confidence, and I've asked specifically for independent advice. You have to have confidence in approving the policy that is on the agenda. All right? What happens next for Aucklanders? Look, that's often not in our hands. But to assist you, talk to the people that in your wards, we will give you some information to back that up based on the information we've been given today. So we have another question now from Councillor Collins. Can you hear us, Councillor? Marlo, Councillor Collins. Hello. Nope, Councillor Walker.
Hello, hello.
Yes, hello.
Sorry about that. I was pushing the wrong button.
Hello, we can hear you.
Thanks, Chair. I've got a few questions. I may have missed this in the presentation, but I just wondered for my own confidence that you've noted, Chair. Can I get an explanation again as to why why we would restrict or maintain the current debt ceiling of 270? I've read the paper, but I'm just interested in. And I understand the idea of prudence, but I'm just interested if there was anything else I had missed in the presentation as to why we would keep our debt as a percentage of revenue at below 270.
Yes, through you, Chair. So the 270 was an historical figure based on the S&P methodology they used to have, and they were pretty black and white at that stage that anything above 270% was inconsistent with the AA rating. Those who've seen things have moved on since then, and I think, look, as part of the discussions we'll have during the LTP process, it's one factor we'll continue to look at and see with a whole raft of other sort of financial levers, see what sort of makes sense for council, bearing in mind that we do wish to maintain that AA rating.
So, Councillor, just to supplement that answer, it may be that we make some amendments once we have landed or about to be landed on our new LTP. All right?
And thanks for that extra bit of explanation there, Chair, because one of the questions, the next one I was leading into was, at what stage would we need to formally review it if we got to the point where there may be an issue that means we have to look at a higher debt ceiling level?
So before or after you land the LTP, John?
Through you, Chair, so if we did reach that situation, then we would have to formally review this policy. That's correct, or as part of the LTP process.
Okay, Councillor?
Yeah, cool. One other question was, in the discussions that I had in setting the strategy or agreeing to maintain the strategy, is there a considered notion as to the level of rates? Because the bottom of page 3 talks about where our income, which is rates, is used as security, but every so often there might be a lender that says we want a bit more for security. So does our rates level have an impact in the considerations at setting this policy?
Through you, Chair, not in itself. I mean, security offered to lenders is our rates income and future rates income. The power of that, of course, is that if we did get into any financial difficulty, we could increase rates by a considerable amount, and people would have to pay that. So that's the power of the security, but the actual level of rates itself probably doesn't influence these policies.
Thanks. And just finally, Chair, my last question is, was there any discussion at any time in the committee around any persons or presentations where people were giving thought to radically departing from the strategy as it is at the moment, because it's pretty much the same and it's been reset to the same level? So was there any consideration to radically depart from any parts of this strategy?
Do you mean from the Treasury Management Steering Group?
Yes.
Through you, Chair, look, there's always debate and discussion at the Treasury Management Steering Group about what's appropriate. I guess back to my earlier point, what we're conscious of is that this policy needs to stand the test of time, and we don't want it to be reactionary to when interest rates or exchange rates or something get to either very low or elevated levels. So, we're conscious it's a long-term policy, and we don't want to sort of play around with it just because interest rates are low for a couple of years, or conversely if they're high for a couple of years.
Thank you, Chair.
Thank you, Councillor. Councillor Walker.
So just a question of the PwC gentleman. Is it fair to say that there are probably any number of black swan events that could cause interest rates to go either up or down? And recently we've seen a big one, which has been COVID. But equally, there are a large number of others, aren't there?
Absolutely there is, and I think that supports John's comments previously that he's just made, in fact, around the policy needing to be fit for purpose for all weathers. So yes, whilst there is a particular scenario at the moment where interest rates are low, that could easily be the opposite, and should inflation move materially higher, interest rates will follow that higher, and council would be protected against that interest rate movement, which is why the policy needs to have that long-term approach to it and not knee-jerk reactions to particular interest rate settings as they are currently, because as you've pointed out, particular events can occur, such as COVID, such as the global financial crisis, which are not predictable and can have a very meaningful impact in terms of interest rate settings and therefore interest cost. And so council's ability to employ a policy that is fiscally prudent over a long-term horizon is entirely appropriate.
Thank you. Councillor Sayers, can you hear us?
Yes, I can, Madam Chair. Thank you. Probably my questions to PwC. We just heard that the debt, forecast debt for Auckland Council is projected to get up to around 14 or 15 million over time. And obviously at the moment, I think we're paying about 1.2 million a day in interest fees. So what options are there for councils around that debt? Like, does council have to just keep increasing that debt level without repaying back capital, or is that something that councils don't do? They just keep it on the books forever and just to keep increasing that debt level. So, Madam Chair, my question is just around what options do councils have to operate with paying down debt rather than increasing debt?
Alex?
And that is really a decision that's made by each individual local authority in terms of their long-term objectives around particularly infrastructure spending, growth in the community, service level deliverables, asset disposals that may bring down debt, where rates changes may be able to facilitate repayment of debt, or where continued capital expenditure programs suggest additional financing will be needed. So in terms of what is a optimal or sustainable debt level, that is very much a sort of dependent on each council's individual scenario that they are facing, and so there's no one rule fits all there, and I can say that other local authorities across the country are asking themselves a similar question: what is our right level of debt? Do we have a plan for debt repayment, or with the current rate environment, do we borrow further?
You all right with that, Greg?
Yes, and look, I think the gentleman for the answer and to elaborating on it, what other councils were considering as well. So thank you for that.
Thank you. And final question, Councillor Coombe.
Oh, thank you. I think this is for you, Madam Chair, in terms of approving the policy. I'm just concerned about the wording that we were talking about before and what Councillor Collins mentioned as well about the debt as a percentage of revenue in the table, because it does say the council's prudential limits are. So by saying that it's 270, it means that anything higher or lower or higher is not prudent, which isn't the case when we've considered the emergency budget. So I just have a concern about that wording as locking us into, if we're following the policy when we go into the 10-year budget deliberations, we are being forced into a, well, we're not actually going to, it's going to make it more difficult for us to comply with that policy. I just want to make sure we're really satisfied that wording is not creating difficulties.
John?
Through you, Madam Chair, look, I think as we go through the LTP process and we find that we want to live with a different debt to revenue level or other changes, then at that time we can make those changes and adjust this policy.
Yeah, sorry, but when we're having our deliberation, if the policy currently says this, then and we're asked to say talk about going higher, the policy says that's not prudent. It's implied in the wording. I mean, it's almost like it needs to be. It needs to say something as a footnote. This is what they are. What is prudential? Subject to other considerations, for example, like what we did during the emergency budget process, which meant that we did set a higher level, so which I don't think we all felt was imprudent. Sorry, it's the lawyer in me looking at that wording and not liking it.
Yeah.
Yeah, if I can just pick it up through the chair. Look, I understand what you're saying. Sometimes, though, what you want to do is actually still state that under normal circumstances, based on the policy and the strategy we have in front of us, 270 is the prudent level. If you're going to move outside of that, you have to have a prudence conversation, and that's what we did. We went out in a consultation document, went out in our final adopted document, which said 270 we deemed to be the prudent level. We have consciously made a decision to go beyond that for 290 for 1 year because under the circumstances it was prudent to do so in those circumstances. So I understand what you're saying, and yep, the legal nuances there, which is you can either do it up front and actually say there might be good reasons not to go 270, or you can say 270 is where you should be. Now let's explain if there's a circumstances, for 1 year in our case, why it was prudent not to do so. And we've taken that second approach. But I can understand what you're saying. It's just whether you want to make too many provisos in the actual policy, because they'll never cover every eventuality.
Okay. Thank you. Good point, though. I think you make a good point. Member Blair and then Councillor Fletcher.
I know mine was a comment, not a question, so...
Okay, Councillor Fletcher.
I know that we canvass this at the beginning of the session, but I'm pleased you've got the recommendations up now. We only, as I said before, I want to back our officers. We need to have a coherent policy, and I've got quite a bit of sympathy with Councillor Coombe. Could the CEO, who is our employee, tell us why we have to adopt this today in as clear a way as he can? Because there strikes me as being quite a strong argument for deferring this until such time as we have more information. And I don't want to make things difficult for officers, but I would like the CEO to give me the comfort of knowing that it's a non-negotiable to have to adopt this today. Otherwise, I would prefer to see it being deferred until such time as we have a bit more information.
Thank you. The amendments proposed to the existing Treasury management policy are minor in nature, and I think for the purposes of today are a reflection of how we operate today. I don't think there's any risk in accepting them today, nor would I think there is much to be gained by deferring them. I think to the point that Kevin and John have made, while I recognise the questions that councillors have asked, I do think we would need to consider the circumstances under which we might want to contemplate any other changes to the Treasury management policy and do that in a more considered way in the future.
Thank you. Comment, is it? No? Nothing. Comment then, final comment from Member Blair.
Yes, thank you, Madam Chair. I'm confident in the policy because we're managing the risk of an organisation of this size. It's a long-term view, and we have over 1 million people we're looking after, and I'd hate us to enter into a short-term view over financial management because, in my opinion, we're looking after the social, cultural, health and well-being of our citizens, and anything that's a short-term view around financial management would not be advisable, I would imagine. It's the most vanilla product to use and a product that also allows some flexibility, so I'm comfortable. We utilise this in my role as a director on a tribe where we're of that size to be able to apportion some of the percentage into swaps, and it is an accounting term and not, and to the general public who don't understand accounting terms, it can be an inflammatory story which people can run off with and take to wherever they want. So I guess it's around a communication piece around what this is. I'm very comfortable because when we manage risk, it's in the best interests of who we represent, and the opposite strategy would not be I wouldn't be able to support. So, Madam Chair, I think I've heard an excellent explanation externally as well as internally, and the leadership around the structure of how we manage it is something which I'm very comfortable with. So, thank you, Madam Chair. That's my comment.
Thank you, Member Blair, and I've got one sneaking in from Councillor Watson.
Yes, thank you, and I will be brief. And I think Member Blair has made some very pertinent comments there, a very practical analysis of the situation. But I think Councillor Darby did raise a good point, and I'm not sure we've actually addressed it, that this particular issue has to be set in the wider context of what we're going into over the next few months, and that is, one in which every penny is meant to be a prisoner. So I think it's very important that in that context that we do address the concerns that have been raised here. There's people of some substance who've made very public comments that don't reflect too well on council. We're not going to change our policy for the very reasons that were outlined in response in some of these articles. But that doesn't mean to say that we don't or we shouldn't feel compelled to explain things as clearly as we can to the public. The analogies in these articles and the comments here today have been made to ordinary homeowners, and ordinary homeowners can understand mortgages and loans. Those same homeowners will understand what it's like when they fix at a set rate and the interest rates drop. They're maybe not quite as philosophical or taking quite as long-term a view as we are in our policy. So we should be honour bound in something of substance of this. These are big figures to go back and to explain that as clearly and to answer specifically the criticisms that were made in the article, because in terms of both the length of the loans and the amount of debt that's involved is very substantial, of course has far wider repercussions than an ordinary homeowner. So I don't feel just content just to let it rest there. Councillor Darby asked, well, what is the strategy or what is the response going forward? We've had some comments in the paper. We've had other, apparent, reluctance to comment, and I'm just going on the basis of the article here. So I think given those circumstances, that we should be using all avenues to spell out our policy, to spell out the long-term view, and to take the assurance we have absolutely been given that in the long term and the swings and roundabouts, that this will be the prudent course and advantageous to council. I don't think it's enough just to leave it, particularly at a time when interest rates are so low and the assumption is that will continue for some time. So I'm not quite sure what the response is there, Madam Chair, but I think there needs to be an informative response and not just satisfying ourselves within these four walls. There is a bigger public out there, and we need to explain ourselves more accurately and more persuasively than we've done to date.
Thank you, Councillor. I don't think anyone disagrees with you, and if you remember that I made a commitment to give you, all councillors, a copy of the transcript for today. We are preparing, because obviously, in bringing Alex to the table today, we were very aware that first of all, as councillors, you needed that independent advice and confidence to vote on this item. But you're quite right, the second stage is to translate that into real language that the normal that Aucklanders can understand, and I think that's the comms work that we will do next. Once you've received your transcript from today and some Q&As, I think if you've got any concerns further that you have to be able to deal with questions or concerns from your constituents, please come through me or straight to Kevin, and we'll. It's already on all of our Auckland, is it?
Yep.
Already up. Yep. So we are anticipating that obviously we need a response, and we've done something towards that. Councillor Darby.
Look, just to close this off, I'm still a little bit unsure as to what the way forward is on this question that's been raised through media. So now, Kevin, you said that there could be reputational risk if we referred it to the OAG. In some ways, would there not be reputational risk if we maybe didn't refer it and then a private citizen did? Because a private citizen could. Does it go both ways?
I think what's been really articulated nicely here in this room is there's really two levels to this, isn't there? One is the assurance that you as the governors believe we're operating appropriately, and you have various mechanisms to do that, including the OAG's responses back to our Audit and Risk Committee itself, the Independent Treasury Management Steering Group members and that group itself. So one is the confidence you have, the assurance that you have been given, which is really the fundamental purpose for today. The second level is what we now look to do beyond what we've already done, which is our Auckland is a published Q&A thing around why hedging occurs in our environment. We can look at whether elaborate on that based on the transcript from today, circulate that to you and see if that's useful information for you to now share, hopefully, your confidence to our public about that we are doing the right thing here.
Okay, so the suggestion, Chair, is to refer it to the Chair of Audit, not just to the Audit Committee, but in her independent role as Chair of Audit to look at the questions that have been raised publicly and to comment on it in her role as chair. Is that what you were suggesting? Because
Yes.
Yeah.
I won't speak on behalf of the chair, but through the chair. Look, no, obviously there are some other options available there. There's been suggestions made around some op-ed pieces and things. We'll explore those as well and see if there's some opportunities there to simplify the language and explain it clearer, as Councillor Watson has suggested.
Madam Chair?
Your Worship.
Yeah, look, there are three professional sources of oversight over what we're doing in this area. One is the membership of the advisory committee, on which we have an appointed person who is a partner of PwC. He will have had the opportunity to look at this, to comment on it, and he would have been very good balance had he been included in the article. He wasn't included. Secondly, we have appointed, I think, a very good person as chair of audit and risk, widespread respect for her and wide experience in auditing these things. And you would have to believe that if we were doing something, quote unquote, that was incompetent or a disaster, that she might have commented on that when she cast her eye regularly over the way that we manage these things. Thirdly, we've heard from the Deputy Mayor that for 7 years this has been an issue that has been discussed with the Auditor General, and the Auditor General has never raised a material concern with this body as to the way in which Treasury follows the process of managing this risk. So there are three professional sources and informed sources that we rely on to ensure that we've got this right, as well as the confidence that we have in dealing with our Treasury management team that we deal with frequently, and therefore we make some assessment about their competence to do their jobs. I don't believe that we need to go further than that. I would like to see balance in the comment and the analysis that has been made. And of course, we will keep our Treasury management policy under scrutiny as we go along to find out whether we can and should be doing things differently. But there's a big difference between making adjustments to a policy, which we should always be asking questions about, than accepting the sort of sensational headlining that we've received in the paper. We will follow a prudent policy of continuing to ask questions and to see whether this management of our debt and our hedging is done in the best possible, best practice way, but we should not be knee-jerk reacting to sensational headline stories that had the opportunity to provide balance but never took it.
Thank you. Lever.
Yeah, look, no one's moved that, so maybe because we've been commenting, but do you want to move that, Madam Chair?
Happy to move it.
And
Would you like to second it, Councillor?
Yeah, look, I'll second. I'm confident with the Treasury management policy refinements. And look, I think the main point today is we're going forward on a very different looking budget. We'll be asking people possibly for targeted rates, and there'll be a range of things there. It's going to be a different looking budget, and I think Councillor Watson was alluding to that. You know, we need to go forward and have that discussion with Aucklanders from a foundation of them having some confidence. And these things come to test us, and we need to face up to them. You know, criticism is a healthy thing. And
criticism's a healthy thing.
Criticism, I'll repeat it then. Criticism is a healthy thing if it's constructive criticism, and sometimes it comes at us with barbs attached as well, and then you just got to deal with that. I'm not going to keep having a crack at media or anything like that for not fully reporting. Items are never ever fully reported that we undertake and make decisions on here. So look, we've got to just make sure that through this hurdle, we are as transparent as possible. We get those people like PwC to make their statements, and the independent chair of audit to make her statements, because going forward, we're going to be discussing a budget that is just going to be looking so different to what anybody has ever imagined when it becomes public in the new year.
Thank you, Councillor. Finally, Councillor Henderson, and you're between us and lunch. So,
well, that's good. I shall be brief. I was planning to be anyway. Just to back up some of the kōrero here today, and I think well said, Chair and Mayor as well. Look, the ordinary person looks at these stories and sees, well, these guys are wanting to play around with the rates, levels of service, all that kind of stuff. But their policies cost us so much, maybe more than what they're asking for. So we've heard that that's not the case, but we're fighting a powerful argument. And I think we're right to feel aggrieved about it because it has actually made the kitchen tables of our communities. I'm getting people hitting me up in the about this. And that's awful. The other awful thing is that we're having to spend so long, with respect, discussing media commentary around this policy, which actually is very important. So, yeah, it's a shame that we've kind of had to go down this path, but here we are. And I'm hoping, and I'm really encouraged to hear that it's coming through our Auckland and we can actually translate that so that the general public get the facts. Thank you.
thank you, Deputy. Councillor Collins. Nope. Great. Well, in conclusion, I want to thank Alex very much for coming.
Is that working now?
Councillor Collins.
I beg your pardon, Chair. Thanks for the chance to speak. Hey, look, I just wanted to say that I've welcomed everyone's input today, but I still remain unclear and perhaps dissatisfied at the answers I've received over time since I first asked a question about the 270 limit, and that was back in March or April when we were first discussing the emergency budget and its impact, this debt ceiling impact on how that was going to be handled. And look, I understand that there are experts in front of the room at the moment, but I continue to be challenged by the idea that we are being challenged publicly to be daring, that we've been too timid not to set 300%. I heard what Councillor Coombe was saying about...
You're saying stuff that's been in confidential. You be very careful. I'm sorry.
No, I was making reference to the emergency budget when I asked about the 270 limit, and that was when I first asked about the 270 limit and questioned that.
Yeah, Councillor, I might just shut you down if that's possible. I'm sorry that we've done questions, and also I'm just concerned what you're saying, actually.
Can I just say then, Councillor?
Yes.
Yeah, and my apologies then if I have said anything that is that's been in relation to discussions that are confidential. My apologies, Chair, but I guess that's what I was getting at with. I know Councillor Coombe asked the question about the prudential limit is set. It says in the paper at 270. I know there's the opportunity to perhaps come back to this later, and I listened carefully to what Councillor Fletcher was perhaps trying to suggest about deferring it. To that point, Chair, I'm going to be voting against on the basis that even without these refinements that the CEO has said can be looked at again and aren't major in nature, that this policy can be looked at. So that was the point I was trying to make. So my apologies again for saying anything that may have been out of line.
Thank you, Councillor. Councillor Cooper?
It was just a question. I just wondered whether Councillor Collins was online when we had a very good presentation yesterday in the workshop from John Bishop about this very subject, which explicitly explained the whole thing, why we couldn't go beyond a certain point.
Yes, Chair, I was online and followed it up with a text conversation with him.
Okay. Look, I'm going to put the vote, but I want to make the point of saying thank you very much for Alex. We did need that independent advice. We do trust our staff, but it was really nice to have that extra independent advice, and I appreciate you taking the time and answering all the questions. So thank you very much. Ladies and gentlemen, it's been moved and seconded. All those in favour say aye.
Aye.
Against?
Against.
Carried. Thank you. Do you want it noted, Councillor?
Yes, please.
Thank you. I'm going to quickly try and do 11 and 12 so we can turn the Skype off. They are both just procedural items. Thank you. Do I have a seconder on item 12? Yep. Thank you, Councillor Mulholland. All those in favour say aye. Against, carried. And finally, I will move us into confidential. No, summary of confidential decisions and related information. Moved by Councillor Walker, seconded by the Mayor. Thank you. All those in favour say aye. Councillor. And I'll move into confidential. Do I have a mover for that?